You talking about this chart? It means that the expected forward returns at increased PE ratios over the next 5 years are negative. So buying the market here likely leads to flat or negative forward returns. Whereas buying the market at, well, like 9 to about 14x PEs leads to significant forward returns over 5 years. 12% inflation, but I mean, that just devalues the dollar equally. So do you need to count it? This time is different. That's what they always say before it's not. Ding ding. Hey, I was right about the top. All right. So we closed a little bit below the expected move for the day, which was, I guess, out at 101, but I think that actually trimmed back with the overnight OI changes. So maybe we closed a little bit closer to the, I think it may have been like 83 or something like that after this morning's update. But up, which, I guess kind of expected. Not really too much outside of the local range of prices that we've seen, but I would imagine, barring any negative news, on a trajectory to head higher and back to the all-time high. Closed above 68.90 on ES, which I think is the first time since we dropped in November that we've closed this high on ES. In the overnight, I would watch last week's close around 68.76 as a pivot point for price action into the morning. Obviously, if this dumps, that's not very sustainable, and then I'll cover whatever positioning changes occurred on the overall chain in tonight's write-up. Here it looks like we saw yields pull back across the curve. Not too much at the top end, but the 2s and 5s moved pretty hard. 6-month and 3-month pulled back, obviously, where the rate cut is felt most strongly. And some liquidity there at the front end will probably help the SOFR IRB spread, but we'll look at that in a minute. Correlation started to turn up on the 1-month into close, 3-month as well, which I guess is a little bit surprising, but maybe not after such a huge drop from earlier in the day. Commodities, pretty well. I mean, gold up, silver up, copper up, and oil up. Oil's still under 60 a barrel, though. Bond volatility is probably going to move on this. 3-month correlation continues to fall. Leverage on the carry trade now back to its prior all-time high, but still very, very elevated. Forward yield on volatility at negative 15.55%. So pretty blown out on the short vol into the end of the day. Skew turned around a little yesterday. Breadth kind of leveled out. I don't know if we see a lot of improvement in this. Maybe we'll see a lot of improvement in like 50-day movers with Russell and Dow both up today, substantially more than ES and NQ. Rate cut expectations for June rose. No change to January. 210 moved up to 60. That's interesting. So up 6.61%. One on yeah, correlation picked up, and IV actually, VX actually moved up today, despite cash VIX and VIX 3-month falling. But I think that might also be the contract rolled over today, because it's Wednesday. So some of that's fucky. Leverage continued to fall, despite the move up in price. Yeah, and the SOFR spread stayed at a 0.3. We'll see what happens with this tomorrow. Also, we're going to get some cash demand next week. So I'm interested to see if the $40 billion in Fed rollover is going to be sufficient to satisfy Treasury issuance. And then buy volume today, not quite as high as sell volume yesterday. So out here, if we go down to the daily, we bounced, retesting the high of the local trend. I think we closed within the trend. Still haven't filled the downside gap at 74 or 764. But this seems to be holding, and it bounced back up through the failure of the lower part of the trend there. So probably bullish. I mean, look for that to get rejected locally. So back under like 68.50 would be pretty bearish over the next couple of days. 68.50, 68.55. Or, continuation out to the all-time high, should the 68.82 level hold, which was, I believe, the November high. And then, I mean, for projection out above that, I think I have like 69.76 and 70.53. But so far, no retest of the EMA 30 or the 20-day EMA. Those are still lagging behind spot, closer to where the gap fill is. I do view the BOJ decision next week as being very interesting. I think it's going to be super important. Anyway, I think that's about it. I guess we could go over some of this. Looks like NVIDIA down on the day. Weird. Microsoft Meta. So a lot of tech selling off, despite improvements in almost every other sector. The bigger names in tech not doing so well. Netflix down, app down, Meta, Microsoft, NVIDIA. But, Google, Apple, AVGO, and Oracle all kind of bounce back. I think they both have earnings this week, which is where, focus is going to turn now, as, everyone's going to be interested in what AVGO and Oracle are going to do. And volatility is probably going to pick up enough on those to drive more of the dispersion trade over the next couple of days. Upstart did good. Did it? Yeah, I guess. It's up like $2. Still not above 50. Anyway, I think that's about everything. So I will see you guys tomorrow. Later.